let's get started with discussing some of the shifting global dynamics. Now, there is a lot happening globally, but the way that we analyze everything that's happening from a macroeconomic geopolitical perspective is really looking at drivers. So in order to distill everything that's happening, what we want our listeners to really focus on from a global perspective are three key drivers that they should be noting that will impact the global economy and certainly India's own macroeconomic story for 2023 as well. And so the three key drivers that we want to focus on: number one, just what's going to happen with China's zero COVID strategy. I have to say this is the most frequently asked question of us. Number two, not too far behind in terms of frequently asked questions, is what's going to happen with the US's Federal Reserve policy. And then finally, just what that outlook looks like for Europe's energy supply situation, considering the impact of the Russia-Ukraine war. Now, these are the three key drivers, and they have a whole bunch of impacts on the global economy as well as India's own economy. So from an immediate impact perspective, again, of these three key drivers is a developed market growth slowdown, which we're already seeing happen. Number two, intense supply chain disruptions across several key inputs. Number three, probably a little bit of a follow on from that second point, is just higher for longer inflation. And then finally, an atmosphere of higher interest rates. All of these immediate impacts then have a whole bunch of secondary impacts as well, mostly on emerging markets, and then of course specifically on India. So number one, as a secondary impact, we're looking at a mixed impact here on emerging market growth. Number two, some intense currency depreciation pressures. And then finally, a trend of rising emerging market sovereign debt, or basically government debt rising. So this is just the broad framework that we want to keep in mind and that we want to use as we are thinking about what's likely to happen in the global economy and India's economy through 2023. Now, I did touch on global a little bit, but I do want to provide the listeners with more of a view on what some of those key assumptions are for 2023. So there are a handful of bullet points here, and these are basically the things to keep in mind as our listeners are looking at, what should just we assume for 2023. Number one, speaking of those key drivers, you want to assume that China will continue its zero COVID policy throughout 2023. In other words, lockdowns should be expected throughout the following year. The second is just in terms of some of that developed market growth slowdown. We are looking at the US as well as Europe to be in a recession to varying degrees through late 2022 as well as early 2023. Finally, of course, the war that started in Feb that has really sparked a whole bunch of impacts as a result of it. The Russia-Ukraine war is expected to drag on into much of 2023. Almost a direct result of that, global energy prices likely to remain volatile and relatively higher, despite the fact that you have this dynamic of a global growth slowdown, again through 2023. Inflation, as a result of that, not likely to subside rapidly despite some of that slower growth. And then finally, and probably most importantly, companies should note the fact that there are just several sources of disruption as well as uncertainty that will impact their forecast outlook, their demand outlook, their targets, etc. for 2023. And so having assumptions is definitely key, but also putting aside a set of scenarios or basically leaving some wiggle room there for some of these assumptions to unfortunately not pan out through 2023 is something companies should account for, as well as they basically are deep into planning season now. So having certain assumptions as your base case, as well as assigning a certain degree of risk throughout 2023 are definitely the key starting points as all of these different companies go into their planning season. Now, let's put some numbers to this qualitative view, both globally as well as for India. So first, as we talk about global, We are again looking at the three key sources of uncertainty and weakness, which is coming from Western Europe, the US, as well as China. So some of those regions and countries is where some of the growth slowdown will see the maximum impact. So you're looking at, if you take, for example, right to left, Central and Eastern Europe, contraction expected there this year and next. North America and Western Europe expected to see flat growth. And then as you move more and more towards the left-hand side chart, you are looking at positive numbers, though mild, but still positive numbers. Of course, keeping in mind the topic of discussion for this webinar today, I want to definitely zero in on that Asia Pacific number, expected to grow at about 3.5% in 2022 as well as 2023. Bit of a mixed impact here because, of course, China is that big, has a big weight and an impact here in that Asia Pacific number. So just to elaborate on that a little bit, what does that Asia Pacific number really look like? Again, we want to be moving from maybe right to left here. We are looking at that developed market growth slowdown trend come through in Asia Pacific as well. Basically, those four markets that you're seeing there, Australia, Japan, New Zealand, and South Korea, expected to see the slowest growth numbers in 2023. The closer and closer you move, of course, to the left-hand side chart, you will notice that India basically is expected to be the highest growth country in all of Asia Pacific in 2023, and fairly positive growth there for 2022 as well.
Yeah, Kinnari, maybe I'll just jump in here to ask one question regarding India. So we see that there is a tremendous potential for some of these markets in Asia Pacific, and India in particular seems like a specific bright spot for us. But in short, could you explain why and what are the drivers of growth in this market that makes it more resilient than the others?
Yeah, absolutely. So I would probably divide this into my answer into two parts. Number one, I would make a distinction here between just what's going on in other markets compared to in India. So for example, you have the impact of China's rolling lockdowns, of course, putting a dampening effect there on China's own growth numbers. You're also looking at some of these other markets such as Southeast Asia for the last 2 years, basically as a result of the pandemic, deep impact there on the overall tourism sector. Tourism does not loom as large for India's economy as it does for some of the other Southeast Asian markets. And then you also have an interesting dynamic where India's energy import prices have not shot up to the alarming degree that we had previously expected because of the geopolitics associated with some of that discounted Russian crude oil coming into India as well, the likes of which are not happening for some of the other developed markets and large net energy importers that you're seeing on the right-hand side chart on this slide. And then I guess the most important differentiator here is India's economy is just simply more driven by domestic dynamics than it is by external dynamics. This is not to say that India is not going to be impacted by all of the different global headwinds that are taking place these days. I mean, that is basically the reason the number that you're seeing here as well is a downward revised number. Previously, we had expected at about 7%, and we're now under 6% growth levels expected for 22-23. So there's certainly that downside impact for India as a result of global headwinds. But it's just by the nature of the economy, the structure of the economy, just a lot more domestically oriented, more driven by domestic factors than it is by a lot of the different external factors that we're seeing, which just makes it a little bit more resilient than some of the other markets that you're seeing here.
Hi, my name is Krista Reganey, and I'm Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.